Hi guys, how are you? I hope you're good. Oh, just one second. We can see that Bitcoin has been going up very much today. No. It's that one. We're pretty high. We just broke the previous higher low. No, the previous higher high that we're having, which is very good. But now we just have to wait and see where it can come back down to. What happened to my camera? Where we would trade now on Bitcoin? Well, I think they're on Andy's call. I guess he's gonna. I guess he's gonna end the stream soon. But before people are coming into the charts, we can start to look at what's happening right now. And can you hear me good? Let's see. I want to see how we look on. Hi, Ian. I hope you're good. Welcome. Just 1 second. We have the weekly over there. And let's see. Okay, good. I think I'm getting a hang of it. I remember in the beginning I had problems with the music and stuff like that, but the more you do it, the more you get used to it, right? And looking at Bitcoin, we did have this huge. Hope you took the trade today. And I was talking about this level. I'm just gonna take these away right now, otherwise I'm gonna get confused. We had this, I don't know if you were on my live yesterday, but remember when I talked about this previous resistance that we did have? That was a good opportunity to go into the market because the market came down to 256, 120, around that area. And you can actually see when the market came here, you could see that we did have a morning star formation right here. These three candlesticks showing you against the previous resistance. And you could have bought the market when this candle closed on the 1 hour chart. So, yeah. Crypto humans. It's my apartment is very dark, but it's actually pretty dark in Sweden. It's only 5 o'clock in the afternoon, but it gets pretty dark during this time of the year. It's not the best place to be at if you want to have sunlight. It's either raining or it's a lot of snow and really cold. That's how it is in Sweden. Okay, so I hope you guys took the trade today. and we'll just see what's gonna happen. We can look back and see where the market is actually reacting to. I like to see that. I know that I'm always talking about that, and sometimes it's easier for us to go to the line chart and just zoom out everything so we can see where the market is actually right now and what type of areas we can use for the future. And we can see right here. And sometimes why it's good using the line chart is because you get rid of all the wicks and all the noises, and when you're going back you can see it looks pretty good. You have the support, you have the resistance, supports, and we can, if we're going back to where the market is reacting to right now, it's around that. So obviously we need to see if we're gonna continue to the upside. And as you know by now, if you've been following me, I'm trading from zone to zone, and the next zone we went from where the market started to pump. It was actually around 50,500, and the next zone that we're in right now is 55,600, around that area. So right now, what I want to see if we are going to continue to break that zone and come back down and retest, or if we are going to react to the zone and then the market will come back down a little bit more again. So right now, if you did take the trade today, I'm very happy for you. If you didn't, we just have to wait for the market to come back down a little bit more, because obviously it's really high right now. Looking at the lower time frames, we can see what we can trade up. If the market breaks, and right now we are, if the market breaks the zone, comes back down again, we could definitely, and we're seeing the market is doing, let's see, like this, it's too thick. If we're seeing the market coming back down again, breaking the previous high that we're having, comes back down and retest it 2 times, you'll have a buy opportunity. But that's only if the market breaks it, comes back down. And going back in time, you can see how it did look on the 1 hour chart. And this is perfect. And even if it's on the 1 hour chart, you can, when you're having a morning star against a previous resistance going back in time, this was the target that I had yesterday. It was from August, at the end of August, and the market came back down and it gave you a morning star pattern. So that's really good for you to be able to trade above that, as long as you're seeing that this candle is above the middle candle. That's the formation of the morning star. And if you saw the market closing like this, you could have entered the market. So for right now on Bitcoin, you know, when the market is this high, I mean, it's we need to wait for it. So, and I haven't been looking at Ethereum during the day, actually. Okay, someone wanted me to look at Matic. I think I already have it. Or maybe not. Yeah, I do. As I told you, I've never had so many pairs. I've never had so many pairs on my trading view before. Yeah, Sandra sent you. My name is Natalie, if you don't know who I am. I'm a part of Bitcoin Census, and I've been that for a couple of weeks, maybe months even. And I've been doing trading for 5 years soon. And I only do technical. Hello everyone, welcome. Someone wanted me to look at Matic, so I'm gonna do that. And we've been looking at this before, and I did use this I did use this previous resistance right here, and you can see clearly how the market actually came down here and respected it. So that was very good. I also used the previous, I also used Fibonacci, and I took it from low to the high. The market obviously did break it, and if the market's breaking the Fibonacci levels, as long as you're having another level like a support or resistance zone, that's what you can use that one. If it's breaking the Fibonacci, you'll have your next target and see what's happening. And you could actually see here that we respected it. The market came back down, and then it came back up and retested the support, the previous resistance, and then it came up. So just using Fibonacci, hello everyone, just using Fibonacci, that's not gonna be it. You have to have more on the charts than just the Fibonacci, obviously, or that's how I see it. But can you see how clear the market came and respected the previous resistance? And also it was a previous support. So right now for Matic, what I can see, I need to look at the lower time. No. Let's see what's happening on the 12-hour chart. I love to use all and Mark is in the building. He's here. Let's see what we can do. What I would want to do right now, because we're having this huge momentum to the upside, obviously, I want to see it's pretty, every candle, even on the 12-hour, we're pretty close to each other. And you have this huge doji right now on the daily. The market is just spiking up. So right now when the market is this high up, and we're also we're in a range, as always, I want the market to either break to the upside and come back down again to see if we're having a breakout retest. And obviously when you're having the retest, you don't want to have a bearish candlestick closing inside of the resistance again, because if it does that, usually what happens, if the market closes inside of it, it comes back up and retests it from the downside, and then it comes back down to the support, and then you just might see the market respecting the support, and then you're having the right movement. So it's so easy to get faked out if you're just thinking that the market is coming back down and you're not looking at how the candlestick is forming against the resistance. So on Matic, I would want to say that please wait for the market if it's actually gonna break to the upside, or if it's actually breaking, coming back down again, and you'll see the market coming back to the support before it's going straight up. But I'm a little bit concerned about this huge wick that we're having right now. So you just might see the market coming back down again, and then you're having it to the upside. So use the support that you're having at 1.200, around that area, I would say, before you're making a decision. Don't hate it, don't date, just trade it. Okay, Matic, someone wanted me to look at You're hot, thank you so much, and the sent us. If you want me to look at a pair, please write how I write it on TradingView, please. Luna. Do I have it? No. looking at Luna. I've never looked at this pair before. It's gonna be exciting. And I want to look how it looks on day. Oh, we are definitely going up. But let's see. Because we're so close to the previous week's high, I want to see how if the market can come back down. So I'm using the previous week's closing of the body just to see where the market can come back down to. And I'm taking the Fibonacci on the daily. If you're not familiar with Fibonacci, I guess you all are. Using Fibonacci is a very good tool if you want to see where the market can reverse from. So in an uptrend, I always take it from the low to the high. And if it's a downtrend, I take it from the high to the low to find my the 1561%, because that's what I'm using. And you can see that the market almost came down to the 50%. It could come back down again because right now we just might have our retracement back here, the pullback. So I would say if we are seeing at the lower time frames, because you can see on the 4-hour chart that we're doing, it doesn't look that good, but you're having the high, you're having a small downtrend right now. But we did break this previous, so we had an uptrend right here, and the previous lower high, the higher low that we did have was actually here, so it was also a previous support. So we did actually oh my god, why are you guys crazy? I don't have OnlyFans, so you don't have to pay anything. Continuing, we had the support right here, and we did respect it. Going to, I want to see how it looks on the 2-hour. And you had a little downtrend on the 2-hour, and we are looking at this high right here. So if we're seeing that the market is breaking the previous lower high, and what you want to see if the market comes back down and retest it on the 2-hour chart. Because obviously we are in a uptrend. So that's what I would say on Luna right now. When you're using the Fibonacci on the higher time frames, like on the weekly, sometimes it doesn't have to come back down there because it's too far away. So you can always take Fibonacci on the daily, you can take it on the 4-hour. Fibonacci works on every time frame, but obviously the higher time frame the better. But this is what I see on Luna right now. If we're breaking the lower high and creating a new higher low, let's see, X. Was someone wanted me to look at that? Yeah. Yes, John, I can do that after. And wow, can you see? When was this? Today, it was around 10 o'clock in Sweden. You could see, can you see how important it is to use the Fibonacci? I think we were looking at this yesterday. We had to do that. Can you see? I took it from the, what was that? I don't know. Well, I took it from the low and to the high. It must have been here. And the market, and if the market doesn't come back to the Fibonacci level, you can still have it, because sometimes you can be able to use the Fibonacci levels for a very long time. And you can see that we did it actually right here. Looking at the 4-hour chart, yeah. First you had this previous resistance, and it was also a lower high. And on the smaller time frames, that actually became the higher low. Going down to the 1 hour, you could see the market giving you 3 spikes to the downside, telling you that it did respect it. So you could definitely have bought the market around the 1561%. So if you're not using the Fibonacci, it actually made me change the whole game for myself, and I've used it ever since I have been introduced to it. That was a long time ago, but it's really good. And for this pair right now, you can see if you want the retracement back and using the Fibonacci level again, we can take this one away so we're not getting confused. Hey Zach. So if you the first retracement, you can see the market coming back down to is the 61%, 0.297. Hi everyone, welcome to my live stream. So that's what I see right now, because the market is just so high right now, so we have to wait for the market to come back down again. And let's see. Bobbert doesn't care about these charts. Well, Bobbert, all the other people is doing that. That's why we are here. Bobbert. Okay, looking at SQR. We're starting up with the daily, and we do have huge wicks. I think I would want the mark. Let's see. I do believe right now it's very hard, because going back in time, well, we can see right now that we are respecting a previous high right here. And we've been just spiking up. And if the daily closes like this, obviously it's 8 hours left. I do believe we can have a little pullback, but we have to see how the market closes. But I would say have an eye on the Fibonacci right now. Also, this previous resistance that I took from the daily. If you're seeing the market coming up to these areas, and you're seeing that the market is slowly starting to have wicks to the upside, looking at something like this, I would say we can come back down a little bit more, and maybe we will have our pullback right now. And to see where the pullback can come to, maybe we can take it on the 4 hour or the 12 hour. Okay, we have to do it like this. It doesn't have to come back down here, but it could. So if we're taking, so right now I did take the Fibonacci first of all from the low to the high, because I want to see if the market's gonna break the resistance or if it's gonna respect it. So we just might have a pullback down, and where I want to see the pullback coming down to, I'm taking the Fibonacci on the daily from the high to the low. So if we're seeing the market coming up and respect these zones that we're having, we can have our target into the Fibonacci level, and that's when the pullback might end, and then we start to see a continuation to the upside, because the overall picture, we are in an uptrend, so we just have to see how the market reacts to these levels. So we just if we're starting to make lower highs and lower lows, but if it's breaking these levels, obviously we can see a continuation to the upside. But I do want to see how the daily closes, and this is something that would, you know, trading, you have to wait sometimes, and it sucks, really sucks. But otherwise, just looking at other cryptocurrencies. Let's see. SHIB. Let's see SHIB. I'm so happy it's a lot of people on this channel right now. I'm very, very thankful for that. Let's see, what was it? USDT. So we're having huge momentums. So what we are looking for is obviously where the market can come back down to, and I'm trying to use the previous support and resistance zones, and you can see that we already have been here and retested it. So looking at the 4-hour chart, we do have this inverted hammer, I think we call it. So what we can do right here is to take the Fibonacci, because we want to see where the retracement can come back down to. Using it from the low to the high, the previous lower high that we're having on the 4-hour chart, we could see the market coming back down to the 50 and 61% area. You can also combine that with the previous high that we did have on the daily, and that's the only data that I'm having that I can use on this pair. So right now, I do think you should wait a little bit more. Looking at how it looks on the 1-hour chart, you can also see that the market didn't break the previous high that we did have. Nilfisk. So yeah, and obviously the market, when the market is this high up, what we need to do is obviously wait for the retracement, and then we are back in the game. So if you missed a trade, I don't think you should go into the market and buying it right now. I guess that's only gonna be you're trading with your emotions, so we need to wait a little bit more. If you want to short the market, we're still making higher highs and higher lows on the lower time frames. But you could see, let's see, if you're seeing the market breaking this low that we're having, you could be sure that the market is coming back down to the Fibonacci level. I hope you're understanding what I'm saying, guys. I'm trying to make it as easy as possible for you, because I know how hard it can be for someone who is new in trading to understand. Okay, so this was SHIB. Someone wanted me to look at Ethereum. And we can see that that's the lower time frames. And this is the same thing right now. We have to go back in time and see where the market potentially can come to, where it can react to, because right now there's no, I mean, you miss, if you're not in the trade, or if you're looking for a new trade, you have to wait. And looking at this level that we're having, this is the previous high, and that's around 36.40. You can see, you just might see the market come back down a little bit more, but obviously we're having a huge momentum right now, so we just have to wait and see what's actually going to happen. I'm going to explain Fibonacci after this, after Ethereum, and I'll show you how to use it, or how I use it. Some people say it doesn't work, but I do believe that if you don't know how to use it, obviously it's not going to work. But on Ethereum right now, if we're breaking this level that we had on 36.40, the next target that we're having, the next level, is around 37.50. If we're just seeing the continuation right now, we just have to let the markets slow down, because it's the movement, it's so volatile right now. So so we just have to wait and see how the market reacts to certain areas. But you can please use the 34, around 34.70, that area, and see if the market comes back down. I don't have a Fibonacci level to use right now, because when I'm using Fibonacci, I always want to have, if it's an uptrend, I can just show it right now. So when I'm using the Fibonacci, guys, it doesn't matter what time frame I'm using it on. When it's an uptrend and I want to see where the reversal can come back down to, I always take it from the low. So let's say this didn't happen, so I take it from the low, and right now I'm the 4 hour, and I take it from the high. But I only take the Fibonacci when I see a bearish candlestick, and the bearish candlestick is closed. So I don't take it from a candlestick that is active. I have to take it from a bearish candlestick. So from the low to the high, as long as I'm having a bearish candlestick where I can take it from. And then what I'm waiting for is to see if the market comes back down to the Fibonacci levels or not. In this case, it didn't do that. So I'm going to show you another example how it actually looks when it's working. So let's say we can take it from the 1 hour. We'll have more. Let's see how it looks. So if we're taking it on the 1 hour chart right now, and you take it from the low right here, and I'm taking it to the high, you can see how many times the market actually have been respected this area right here. Right here, okay? But when sometimes, I mean, you have to be very patient with it. You can see right here, you take it from the low to the high, and you can see how the market reacted. It came back down and reacted to the 50%. And usually the market, what I've seen is that it usually respects the 50% more. Look at this, you're taking it from the low to the high, and you can see the market coming back down, respect to 50%. But if you're taking it from a downtrend, you're taking it, it's just the opposite. You're taking it from the high to the low, and you want the market to come up to the Fibonacci levels. Okay, let's see. I hope you understand the Fibonacci. Someone wanted me. I think I looked at ship. XTZ. So it was a couple of, I don't remember if yeah, maybe I was looking at it yesterday. And going back in time to see what we have been looking at, you can see that we do have this previous resistance on XTZeta. And I also had the Fibonacci level from the low to the high if we're looking at the daily. The market didn't come back down to the 50, it almost came back down to the 50%, but it didn't reach the whole way. But remember when I'm telling you, you can use more than just the Fibonacci. I mean, you have to, and you don't have to, but I'm using previous support and resistance levels, and you can see that we did come back down to the resistance that we did have. But that's on the daily. We want to see how it looks on the smaller time frames. And we can see right here that the market came back down to the previous resistance, and you could start to see the market actually breaking the downtrend. And you did have the lower high right here where the market broke. You could see how the market broke the downtrend and it came back down and created its higher low against the previous lower high. It's a bad one. But if you were unsure on that one, you could actually see that the market did break these levels too, and it respected it, even if it didn't come the whole back down to it. But you could see that you did have the wicks to it. No, I don't trade with harmonic patterns. The only thing that I'm using when I'm trading, I'm just looking at market structure. I'm using Fibonacci. I'm looking at how the candlestick patterns. I always look at the candlesticks. Like, I'm breaking everything down from the 1 hour, from the daily to the 4 hour, and I'm just trying to see and combine how they are working together. But what I think about this pair right now is you can use, if you want to see retracement back down, a pullback, because obviously we are pretty high up right now. I would say wait if the market comes back down to 8.0 and then a continuation. So that's the first important zone that we're having. You can also use these. You can see that we did have the previous resistance. So if the market doesn't come back down all the way down to that area, you just might see the market just coming to 8.3. But as you know, guys, you're not supposed to trade when the market looks like this. You were supposed to trade when the market was down here. You're never gonna trade when the market is when the market is this high, because you're gonna lose your money. Okay, you're gonna lose everything that you're having. Natalie, when are you going to open the Bitcoin Census Academy? We're actually on our way, so we will tell you guys when we are done with it. But we are working with it. So let's see what other pair. Sol. I'm sorry if I'm missing someone. It's not. Let's see. I'm not ignoring you guys, but I'm taking the ones that I'm seeing. And yesterday we did have this triangle right here on Sol. And can you see how perfect this was? You're having the support right here. The market broke it, came back down, and it retested it. You had this huge bullish candlestick to the upside. You had another bearish candle that rejected the market. And after that, you could just see the market going back down. So that's beautiful. That's a previous support turning into a new resistance. Looking how it looks on the lower time frames, you could have used the Fibonacci tool right here. Hope you can see this. Guys can take these one away. can you see how the market broke the Fibonacci, came back and retested it, and then it continued down? Guys, you need to understand Fibonacci. It's beautiful. It's telling you guys what it's doing. Okay, I think so. No. But right now, I do believe we still can use this previous support right here around 156 500. Why is that? Because as a support, we broke the support, and usually what the market can do, can break it, come back up, and then retest it, then the continuation happens. So that's what I see. So I do believe you can use the previous support around 156 600, see what the market is doing. Looking right now, we are at the previous support right here. You can see that the market spiked through it. So if the market doesn't come back down to that level, you just might see this happening. You have the breakout retest, or you just might see the market respecting the support, coming back down. Oh yeah, coming back down again. Or if it's breaking it, we just might see the continuation to the downside. But using these levels and look how the market reacting to them, that's the best advice actually I can that I actually can give you. I mean, if we're looking at the daily on Sol, you do have huge candlestick to the downside right now. I just want to see how the market reacts to this support that I was talking about. It just might not respect it as a new support. It just might retest the previous lower high that we're having, a lower low that we're having right here, and then create another lower high, and then we just might see the market coming back down even further. So if we're taking the Fibonacci on the daily, I do believe we will come back down a little bit more, but when I'm looking at this candlestick right here, that's what I think about that. Looking at the 4-hour chart, even though we have this huge bearish bullish candlestick, I really want to see if it's gonna break this support or not. So use 161.800. And see how it reacts to it, if it's breaking it or not. If it's breaking it, that's another thing. You can start to look at buy opportunities. But if you're seeing that you're having huge, a lot of wicks to the upside, I don't think you should go in and buy the market. I think you should have to wait and see what's going to happen. HNT. Have you guys been taking any trades today? No. Can you see how perfect this was on the weekly? The market came down to the support to the Fibonacci level. And if we're seeing how the market is reacting to it on the lower time frames, that's very good to see. You can see that when we came back down to the Fibonacci levels, this is something that I always look at. So when we're having the downtrend, you can clearly see that. And when we're coming to the Fibonacci levels, you could see then that the market is actually breaking the downtrend that we're having. And you can see how the market starts to respect the previous lower high that we're having, creating new higher lows at the same areas. I hope you're in profit, guys. So that's why it's really good using the Fibonacci levels on the higher time frames, so you're not getting panicked on the lower time frames when the market is going down and you have no idea how far the market's gonna go. Fibonacci is perfect for that. But right now on HNT. But what, I'm never in profit. Are you in the beginning of being a trader? Because that's every trader's start. Having the Fibonacci on the 12-hour, you take it from the low, you take it from the high. Can you see how the market came back down and respected the Fibonacci level? You have to understand how to use the Fibonacci, obviously. And even if I'm telling you guys, yeah, you take it from the low to the high, sometimes it's different areas. And you have to get used to it. You have to look at, you need to go and back test it. It's so easy to explain because you have to sit with the computer so many times and just seeing how the market reacts to the Fibonacci levels and when it does it, how it looks. Because when I'm saying take it from the low to the high, I can also mean this low. But for me, this is a low too. And you can see how perfect that actually became. So I do believe we can use this Fibonacci one more time, as is, you can also see that it was a previous support. You can use this previous higher high. And if we're seeing the market's breaking it to the upside, comes back down and retest it, we just might see a continuation. Or if you're seeing that the market is respecting this previous resistance right here, because right now we are just moving sideways. If you're seeing the market coming back down again, use the previous support that we're having around 20. And then we just might see a continuation to the upside. Oh, sorry. HB. Is it against USD or USDT? Okay, USDT. Oh, no problem, AZ. There's no problem. Are you guys fighting with this guy, Bobbert? Okay, so I'm taking the Fibonacci again on the from the lower time frames, from the higher time frames to the higher time frames. I can go down to the 15 and 5 minutes soon. I'm just gonna go through this. Hi Salvador. So if we're seeing the market closing like this today, obviously this 8-hour left, it's so hard. But we can see that we did break this previous, so the market was in a uptrend, obviously. You can see the higher high, a small higher high, a small lower low, higher high, higher low, higher high, a low, and then we actually we did break it. We did break the low that we're having, and we're starting to have a downtrend right here. So this could be the pullback that we're waiting for. You can see, you just might see the market respecting this low that we're having. So if you understand market structure, you can see that the lower low gets respected or get retested by the new lower high. We can take the Fibonacci from the high to the low, and you can see that the Fibonacci is just with the support that we're having. And we are right now into it, and we can look how it looks on the 15 minutes. And I just want to see one thing. Just give me a second, guys, on this. Just 1 second. Give me just 1 second, guys. I just want to see something. Okay. Okay, the lower time frames is not good right now on this pair. I don't like how it looks. But if we are looking at the higher time frames, I would say look if you're seeing that the market is breaking the Fibonacci. If it's not breaking, you can see that we do have this first wick to the upside. Then it respected one more time right now, and it's 7 minutes left of this candle. If we're seeing the market react to it 2 times, you could definitely sell the market around the second touch right here. And why is that? Because you're having the previous support. And the target that you can have is on the Fibonacci level that we're having on the higher time frames. And you can have it around 0.35 or 0.34. As long as we're closing below the Fibonacci. Dot. Okay, so I haven't looked at this pair for a while, I think. No? Can you see? Oh my god, it's really funny when you haven't been looking at the chart for a while and you can see that it's actually doing what you think it's gonna do. Even if it did come back up again, this level right here, it actually came back down, broke it, and then it retested it, and then it did come back down. And I guess I did have this, I guess I did have the Fibonacci right here too. Yeah, you can see. It did come back down and retested the 50%. So I took it from the high, from the low to the high. Market came back down and touched the 50%. And then we're having a huge movement to the upside. So you can use the previous support that I did have right here if you're starting to see the market coming back down again. Because right now, obviously, we're just in a huge uptrend right now. We have huge movement to the upside, and it just continues, as you can see right now. So I would recommend you not to go into the market right now. I would want you to wait if the market comes back down and retest these previous areas that we're actually having the previous support, and that's around 30.80. And we are now, because you can see that we did have the high, we did have the high, lower high, lower high, lower low, lower high, lower low. So if we're seeing the market breaking the previous lower high, that is actually, we're around that area right now. Who is Bobbert? Bobbert just want to make people angry, right? Bobbert. No, when I'm taking my Fibonacci, I don't use it against wicks. I only take it from the body of the candle. That's just how I do it. People are doing differently, depending on how you're doing it and how you've been backtesting it. For myself, I like to use it from the body. Bobbert is out. So yeah, we have to wait and see how this candle actually is gonna close. And having a huge movement like this. Looking at it. Oh guys, it's always gonna be people like that. It's okay. It's really okay. It doesn't have to take these people serious. It's just funny how you can teach us how to scalp, Natalie. Okay, so right now on dot we have to wait to see how it's gonna look. Someone wanted me to look at Bitcoin. I guess Bitcoin is really high up right now. So you can, even if the market is just moving up like this, as long as we're finding on the lower time frames, as long as we're using the lower time frames and we're seeing where the market has been creating a resistance or a support, and this was the high of long session. So if we're seeing the market continue to the upside, because obviously we are very volatile right now. If you want to wait for the market to come back down, you can wait for it to come back to around $53,000. And where's that on the lower time frames? You can see that. So if we're seeing the market not respecting, obviously if you're seeing the market break this high that we're having, it comes back down and retest it. And you see the market might respect it 2 times. The market just might continue to the upside. But looking at the higher time frames, we need to see where the market has been reacting to, and that was something I was going through in the beginning of this live stream. It's very easy. I am low-key missing Bobbert. He'll be back in 300 seconds. If we're taking the line chart, because sometimes you can get confused looking at the chart like this. And when you're using the line chart, you actually just can see where the market has been closed. So you don't have wicks or anything. It's always the bodies that the line chart is using. And you can see right now that we are respecting this previous support that we're having on April the 7th. And you can see that's where the market has been coming to right now. So what we can do is to see if the market comes back down right now. And if you're seeing the market coming back down and retest it as a new support, resistance, I'm sorry, you just might see the market coming back down a little bit more. If it does, then if it's just coming back down and retest the previous high that we're having, the high that we're having right now, and I took it from the body of these two candles and I took it from to the wick right here. I'm not taking it to the huge wick because it's gonna look, you're gonna get confused. You have no idea what's going on here. So I'm taking it to from the wick, the bearish wick right here. So this is what I see on Bitcoin right now. If the market retraces back a little bit more, you can use the previous resistance that we did have around 53,000. So look at that. But don't do anything right now. You have to wait to see if the market is going to continue to the upside or to the downside. Thank you, Mark. Oh my god, Bobbert is here. Again. Where is it? I think I saw it. So many pairs, I'm getting so confused. Please don't ban me. As long as you're having respect to each other, and especially to me, don't be rude. Okay, so what? This is the one I was supposed to look at. Oh, we can also see that, was it during the day? We can see that we did come back down to the lower, maybe we can see that we came back down to the 50%. See guys, how important it is to use the Fibonacci. Fibonacci is a reversal pattern tool that you can have. Not pattern, it's a reversal tool. And when you're seeing the market coming back down here and starting to make dojis, you can definitely start to see the market going up. You can also see how it looks on the high time frames. And when you could have taken the Fibonacci here too, and you could see that we did come to the on the 15 minutes, you can see that we did come back down and retest the 50% again. No, the only tool that I'm using like this is the Fibonacci, and then I'm using market structure. I am using support and resistance zones, and obviously candlestick patterns. That's the only thing that I use. I try to use volume, but you know, when you're getting how the market's working, I just didn't want to confuse myself even more. And we're having this resistance right here that we just broke around 31.90 and 70. You just might see the market coming back down and retest it again. Obviously right now you're not able to trade this pair. I mean, you can do it, but don't blame me if you're losing money off of it, or someone else. You're the only one you're gonna blame everything for. But I would say, even if the market comes back down to this, always use the previous resistance. Going back in time, guys, that's what you're doing. You can also do it like this. So this this support previous resistance 31.54. Wait if the market comes back down. So right now on a lot of pairs, we have to wait for the market to come back down a little bit. Because you're never buying. It's like catching a knife falling. You don't want to do that. Mel C wanted me to look at you have the support right here on the weekly that we did respect. We're starting to make higher highs and higher lows. Where the market can come back down to right now, you do have this double bottom right here. Right there. And you just might see the market coming back down and retest the previous resistance, and that's also the previous lower high that we did have. We broke it. We retested the lower high one time as a new, oh no, okay, we can go down to the 4 hour. Yeah, we did create a higher low right here. So, and we can see that we're having a lot of wicks right here. I don't know, it looks like this pair has, yeah. So what you might see is if the market comes back down and retest this previous resistance that I was talking about. And that's around 0.0480. So you just might see it coming down like that. So that's an area that I think you should look at, because looking at the lower time frames on the 1 hour chart, you can see that we created a lower low, a lower high, a lower low. So if we are respecting this lower high right here, you just might see the market coming back down again to the support, and then you just might see a continuation to the upside. No problem. Let's do OGN. I do believe I have that one right here. Oh, this looks beautiful, guys. And I'm having a previous resistance and a previous support, and we can see that we did retest it. Yeah, Bobbert is doing it again. You can, if you took the Fibonacci from the low that we're having on the 4 hour chart, around 0.8 to the high, and that's 0.9, can you see how perfectly the Fibonacci also came into the previous support and resistance that we did have? Market came back down, retested it, and then the continuation to the upside. But what we want to do right now is obviously see if we are breaking this lower high that we're having. It becomes really easy when you're using the previous downtrend support and resistance zones to see if the market's actually going to break the downtrend or if it's going to create a new lower high. Because this was the previous lower high that we didn't have. We didn't have the lower low. We created a new lower low, but we came back down to the Fibonacci levels and it respected it. So it just might be the one pushing it up to the upside. Break it, come back down, retest it. You can also come back down and retest the previous high that we're having. And then you just might see the continuation. And you can see that we do have this engulfing candle. We did engulf at least two candlesticks right here, having a huge movement. So using the previous high that we're having around 0.9, see if it's breaking it or if it's going to respect it and come back down a little bit more. And if we're having a bearish candlestick right here, you can take the Fibonacci from this low to wherever the market's going to have a bearish candlestick. And then you just might see the market coming back down to the Fibonacci. And then you start to see if it's giving you a candlestick pattern that shows you, hey, we're going to the upside. And then you're buying the market. But obviously we need to see a bearish candlestick to see if it's actually going to come back down so we can use the Fibonacci level. Can Dash hit its Is it Dash USDT you looking at? Oh, if it can, if it can, oh, this is Dash all-time high. Well, it's a long way. If this is the only data I am having on this pair, but it does look like we are continuing to the upside. So in the long run, yeah, we could definitely come back up. We're seeing right now on the weekly, we are making we only have 2 touches on the weekly in using the trend line though. But we can go down to the daily and see how it looks. And we did have the higher low right here, not lower high, sorry. And it looks like we're gonna break it right now. So if we're seeing the market breaking it and then come back down and for the new lower high, we just might see a continuation. seeing it like this. And you can also see that we had a consolidation on the lower time frames on the 4-hour chart. You can see that it did look like this. And it actually just broke it. So what can happen right now is it comes back down, retested, continuation. As long as you're not seeing this candlestick closing inside of the consolidation again. So you can wait to see how this candle closes, even if it's 4 hours. Even if it's 4 hours, it's better for you to wait for it than just jumping into it. You don't want to trade of your emotion. So this is what I see on Dash, but definitely it can be, yeah, if it's always starting to go up, yeah, it could definitely, but it's a long way there, but mana. It looks like we have the same scenario right here. We did break this lower high that we had, and we came back down and retested it for a couple of times. I think you can still use it. Looking at the 4-hour chart, we can see that we are just moving sideways right now. So what you want to do right now is to wait and see if it's going to come back down to the support, retest it, and then continuation to the upside, or if it's just going to consolidate for a while now. So if you're trading inside of a consolidation, it's really hard, because this is a good way to scalp actually, but you're just taking your if you're having your entry around the support, you're taking your profit with around the resistance and vice versa, because you don't know if the market's going to break it or not. When you see the breakout, you want to wait to see if the market's going to close inside and come back down into the market. Usually that happens. That's why it's really easy to lose money in a sideways market. So you want the market to break either to the upside or to the downside. And we're actually having the 4-hour chart. This is very hard to trade. It's really hard to trade. So I would say wait for mana to break the resistance 0.8 or the support 0.7. Rent USDT. Is it that one? No, Ren, sorry, you said that. Let's see if I already have it. So we did have the high. I also take the Fibonacci from the low to the high on the daily. Looking at the 4-hour chart, we can see that we are having a small downtrend. We did have the high. We created a lower high, a lower low, and then a new lower low because it broke the previous lower low. So using, you can use the Fibonacci level as the target if you're seeing the continuation down. If you're seeing the market coming back down to 50 and 60% area around 1.07 or the 61 1.03, and you start to see the movement to the upside, as I showed you before, how the market is breaking the downtrend and becomes an uptrend. That's when you can start to see buy opportunities, because we are now in an uptrend. So you want to see if the market comes back down and creates its higher low right here. On the 4-hour chart, we are in a downtrend, obviously, but on the daily, we did make our higher high, so it just might come back down and create its higher low. So we're having different trends on different time frames. That's why it's really good for you to using different time frames, so you'll have the perspective of what's going on. On the higher, we are on the uptrend. On the 4-hour chart, we are on a downtrend, but that's just the pullback that we're having on the higher time frames. This is how it looks. If this is the, what do you think about? On Binance, okay, sorry. What do you think about ADA USDT on? What do you mean? Do you mean if the market comes back down there? Why are you using 1.878? Demi, why are you using this? I don't know why you're using this zone right here, if you're using it as a previous resistance or support where the market can come back down to for long. Yeah. Yeah, the market can come back down there. You can also use the Fibonacci on the weekly, and you can see that we're actually heading down to it. Right now we came back down to the Fibonacci on the 50%. And we respected it. We started to create higher lows. I'm sorry. But we're also making lower highs, obviously. So it looks like we are respecting the lower high right here. But obviously, you would want the market to break this previous, if we're seeing the continuation to the upside, you want the market to break this previous lower high that we're having around 2.3. Also using the 4-hour chart, you can see that we are right now respecting the previous lower high on the 4-hour. If you're seeing that the market is breaking this this previous resistance, you just might go long. But if you're not seeing that, and you're seeing the market coming back down a little bit more, comes back up and retest it one more time, that's when you are taking your shorts, and you can use the Fibonacci again if the market comes back down there. But it's very far away, so you really have to look and see how the market's actually reacting to it. And if the market comes back down, you can also use this support right here to see if the market actually is gonna come back down and respect it, using the Fibonacci on the 1 hour chart from the low to the high that we're having, the previous low, the previous high. You just might see the market coming back down to the Fibonacci, creating its higher low, and then continuation to the upside. Because you can already see that we did touch the weekly Fibonacci level. Was it the weekly? Yeah, you can already see that we did touch the weekly Fibonacci level right here. And it's pretty far away from the target that you had. So just focusing right now on what's happening here. You don't have to focus on that area right now because it's too far away. And you can see that we did have the fake out to the downside. The market broke it, came back into the consolidation that we're having. We've been consolidating for 2 days right now. So you could definitely see the market breaking this support, this resistance around 2.2, come back down and retest it. And then the continuation, or if the market now respects the resistance, come back down, but it does create its new higher low. So using the Fibonacci on the 1 hour DME, you take it from the low to the high. If you're seeing the market coming back, also you can combine it with the previous support that we had around 2.171. If you're seeing that the market is not breaking that level, you can start to see movement to the upside. Is it USD? So going back, there was a couple of days ago, I did look at this pair. Can you see what happened? Market came down to the Fibonacci level. Obviously, we have this huge bullish candlestick to the upside. But if we're looking at the lower time frames, even if it looks like this, you can see that the market started to make higher highs and higher lows on the lower time frames. Has anyone started to use Fibonacci after you've been, because I talk about Fibonacci so much. Okay, so we did have this previous high right here that we just broke, this previous lower high. We can take the Fibonacci one more time. We can take these away. Also, something that I recommend, guys, when you're analyzing the market, try to take away things that is not important right now. So using this Fibonacci right now, when I'm taking it away, is a lot of things disappearing, because when you're trading, you want to try to be as focused as possible, and a lot of things on the chart can actually make you very confused because you don't understand what areas, why certain things are on the charts. If you know that, that's good. But the cleaner chart that you're having, for myself, just talking from my own experience, but the better it is. Remember, trading is very mental. So if you are confused, that's gonna affect how you see the market. Okay, so we want to see if the market is actually coming back down to the Fibonacci level around 1.37, or if it comes back to the previous resistance that we did have. It can just come back down, retest it fast, and it would only be a wick, and then you see the continuation to the upside. So I would definitely recommend for you to look at around 1.41 and 1.42. It doesn't have to come back down to the Fibonacci level. Only look at the Fibonacci level if it's breaking the resistance that I was talking about right now. Then you're starting to look at the other targets. Looking at LTC, we can see that, oh yeah, we're just going straight up. The first target you can look at is around 172.85, around that area. Going back in time, you can also see that it was a previous resistance. So if the market comes back down there, because obviously, as I always say, you have to wait for the market to come back down a little bit more, because right now it's way high up. It's too high. It's really easy to lose the money when the market has already made its move. So right now we just have to wait for the other move, but we have to wait for the market to come back down a little bit more. But where the market can come back down to, obviously we need to see if we're seeing the market coming back down and we're seeing the market starting to reject these levels right here, we just might see an entry to go long. So you can have several targets to see where the market actually can come back down to. If we're seeing on the 1 hour that the market, it's 25 minutes left of this candle. So if the market's gonna close with a bearish candle, you can take the Fibonacci. And can you see how the 50% combined with the previous resistance that I was talking about? And also a previous support. So for the market to come back down here again and then see the continuation to the upside, that could definitely happen. And that's around 171.46 or 173.15. We're seeing the market coming back down as you see the continuation. You have the first leg, the market comes up a little bit, the market comes down, but it's closing above the previous first leg that we're having. That's an indication for you that you can actually go long on the market. And you're having the support, the previous support, now resistance. You're also having the Fibonacci around the same area. It's really good. So I would just wait and see how this candlestick is closing. But if the market doesn't come back down there, well, you have to come back. We have to go back in time. So we can use the high just to go back and see where the market actually has been reacted to. And the closest area right now that we are having is around here. So we're going back and see the market. because we're having such a huge movement to the upside. The market can just make a fast pullback, and then the continuation. Taking this one away so we're not getting confused. You can take the Fibonacci from the low to the high. And we are right now at the Fibonacci level, and I'm looking at the 15 minutes. We can take the Fibonacci level from the low to the high and see how the market reacts to this Fibonacci level that I'm having right now. It can just be a quick retrace, a pullback. So if we're seeing the market coming back down here again, retest it, and the first leg is here, the second leg is closing above the previous leg, we can buy the market. But we just had a new 4-hour candle that got activated. So as I told you, this could, on the 4-hour, this could just be the wick. We can just create a wick and then the continuation. Can you see how it reacted to the 50%? We'll just see if it comes back down again. Nano. So on the daily, we did have the lower low and lower high, lower low, lower high, a new lower low, but also a support. We did break the daily higher high right here. We also came back down and retested it. Going to the 4-hour, it looks so much better. You can see the retest, but we are also just consolidating right now. So what I would recommend for you to do, if you're seeing the market coming back down again and it gives you a retest, a doji, a candlestick pattern, then you just might see the market continue to the upside. But if it's breaking the previous support resistance, comes back down again and retest it, you can definitely, not definitely, but if you're seeing that the market is reacting to it, and you just might have 2 touches. You can also have 2 touches on the lower time frames. But you can also see the market breaking to the downside. And the next target we'll have was the, oh yes, too far away, I wouldn't say that. But we can use the Fibonacci obviously because it's very good right now. We're taking it on the daily from the low to the high. We can also see how it looks on the if it's breaking the support, use the Fibonacci level on the daily, see how it reacts to it. But right now we are just moving sideways, so the market can definitely just continue doing like this. So if you want to save a safe trade, or however you are trading, make sure to see if the market comes back down to the Fibonacci level, continues to the up and breaking the downtrend. You can look at the 15 minutes, see if it does that, or if it's just gonna break the previous resistance that we do have around here. And you can also go back in time and see that the market has been here a lot of times before. So if you're seeing the clear breakout comes back down, use this level right here, 5.8. So yeah, guys, this is I'm gonna end this live right now, but thank you so much for being on this live stream with me. I appreciate it very much. I hope you understand what I'm talking about, and I hope you have your targets. So please continue to have a good night, or day wherever you are in the world. And we see each other in tomorrow's live stream. So thank you so much, guys. Have a